Financial Survival Network, helping you to survive and thrive in the new economy. Get our complimentary newsletter at financialsurvivalnetwork.com. This is the Financial Survival Network.
These are tough times, and they're getting even tougher. The clock is ticking. The countdown to collapse is well underway. What are you going to do about it? Will you just wait for it to happen, or will you be ready when it happens? The decision is yours, and yours alone. Join myself, Mickey Fulp, Robert Ian, David Morgan, Jeff Berwick, Elijah Johnson, Alan Butler, Gregory Manarino, Daniel Amaduri, Andy Hoffman, Tekoa Da Silva, Trace Mayer, one of the world's leading Bitcoin authorities, Bix Weir, Jay Taylor, and Gary Christensen at the Liberty Mastermind Symposium in Las Vegas on February 21st and 22nd, and learn how to create your plan to survive the collapse. The last Liberty Mastermind Symposium was one of the most highly rated conferences ever, and this one promises to be even better. Don't miss it. Join us and register now at libertymastermind.us. libertymastermind.us. This one is going to be out of this world, and it's going to be even better because it's in Las Vegas, Nevada. Go to Liberty Mastermind US and sign up today. You are listening to the FinancialSurvivalNetwork.com. I'm Kerry Lutz on 1230 WBZT. Happy 2014. Well, will it be a happy 2014? That's really the question. And we've got master forecaster Martin Armstrong. You know him well, ArmstrongEconomics.com, here to figure out and unravel the riddle of 2014. And it is quite a riddle because no one was expecting 2013 to work out the way it did, especially for real estate and the stock markets, except perhaps Martin Armstrong. Martin, welcome back and Happy New Year.
Oh, Happy New Year, and thank you for inviting me.
Hey, so 2014, it's really muddled, and the market is holding, at least the Dow, and it's holding pretty steady, and the returns last year were nothing short of amazing. And at the same time, you look at gold and precious metals, commodities. By that definition, inflation was very tamed, and we even had a little bit of deflation, perhaps.
Yeah, I mean, you still have a major deflationary trend impacting pretty much everywhere. I mean, of course, in Europe, you have them raising, taxes, and the economy's been turning down. Unemployment among the youths over 60% in the South. You have them, the IMF actually talking about confiscating 10% of everybody's accounts over there. So, you're getting asset inflation, but not. It's what I called before it's stagflation, where you're not getting the economic growth. It's not a demand sort of boom, but prices are rising on the asset side, but you're getting declining economic growth. And the same thing in the States. I know a lot of people were touting the quantitative easing, and that's got to be inflationary, et cetera. But you really have to look closely. I mean, one is the fact that the dollar is really the reserve currency, and the demand for the dollars is huge around the world. But besides that, the Fed never actually does what it says it's going to do. And fine, it stood up and said, okay, fine, we're going to be buying all these bonds and hopefully bringing down long-term rates. But then the banks complain that they got nothing to put money into. So then the Fed in 2008 said, okay, fine, we'll create excess reserves and pay you 0.25%. And there's $2.3 trillion in there. So effectively, all they really did, they bought the bonds, and the banks just took the cash and posted it there. They didn't really go out lending it into the economies per se. So, you don't have the massive inflation that people were expecting. It was more or less sterilized. And on the pension side, we have just a huge crisis, and it's not just here; it's also in Europe. Probably about 50% of the German municipal governments are likely to go bankrupt because they all have the same problem. You have these pension funds that haven't been funded, and Detroit is basically showing, here's the green light, guys. This is the way to get out of it. And most of the municipals in this country that are in trouble is largely because of pensions. So one way to get out of it is basically to go bankrupt, and I think those that are in pensions, worked for the state, are going to be in serious trouble long term. So, those are deflationary aspects. I mean, people have been talking about, the unfunded liabilities are, in the trillions of dollars. That's assuming they're going to actually pay them.
Yeah.
What if they don't?
Hey, look at Detroit, right? I mean, perfect example. And the bankruptcy court ruled pretty much against the pensioners, although they said, we won't put up with any really unreasonable haircuts. So you better come up with a formula that doesn't screw the people too badly on the bottom end of the pension curve, meaning the rank and file. So I think what the judge was saying, although he didn't say it in as many words, but I read the decision as like, all right, the upper earners, the six-figure pension people, you give them the haircut. The people who are averaging $20,000, don't take too much from them, although you can take some. But those high earner pension people, you go after them first. But basically, it's a big excrement sandwich, and everybody's going to have to take a bite, is pretty much what he said in the decision.
Yeah, I mean, people don't realize how, savings no longer, the old idea that, you buy your house, you pay your mortgage, you save money, and that's going to be your retirement. You don't earn anything anymore. And just this Christmas season when I went out shopping, I was shocked that most of the sales clerks in like Macy's and different places I went to, they're all elderly. You don't see the young, high school kids, trying to earn some money for Christmas or something like that. It's all elderly now. It's like very interesting.
Hey, what about when you and I were growing up? Kids our age had paper routes. Now it's adults driving around in cars at 5 a.m, throwing the paper out of their window to your doorstep. Things have changed, and I know a guy who was my best friend's uncle. He got wiped out by Bernie Madoff. He's now working at Macy's in down here in Florida someplace, working 25 hours a day to make ends meet. And that's the changing dynamics of the labor force. And look, if you're a store, do you hire some kid with a nose ring, or do you hire some guy who's 70-something who had an illustrious career on Wall Street and probably isn't going to try to steal you blind or be nodding off in the storeroom because he's on some controlled substance? Yeah,
it's everywhere. I took my car in to be serviced, and they have a shuttle to take it back to the office while they're working on it. And the shuttle driver is probably 75.
Amazing.
So it's just interesting. I will always talk to them and say, so how much of this do you do? He says, I work about 3 days a week, and so there's 2 of them, and they swap back and forth.
And no Obamacare for that guy either, because he's on Medicare already, right?
Probably.
Another reason to hire the elderly, which I hadn't thought of before. But if the guy's already on Medicare, you don't have to give him health insurance either.
So I think it's a lot of this is it's changing things dramatically, and so there's just a tremendous amount of shifts within the economy, and it's you have to understand that technology has in part caused some of it. Like you have, Amazon putting out, a lot of the bookstores out of business. The internet has advanced tremendously, and this is important to grasp too, because it's always the same thing. The Great Depression, the reason unemployment went to 25% was that if you look beforehand, you see that 40% of employment was in agriculture. So agriculture took two major hits. One, with the invention of the combustion engine, they could buy tractors and stuff like that. They didn't need 100 people out there tilling the soil. And then you also had the Dust Bowl, and then that was the killer. That created all the hobos, etc. So
the Okies, the Okefenokis, right?
Yeah, and and when cars were first coming out, you had people, protesting. They were the buggy makers, which are now gone. I mean, in England, it's people don't realize, but one of the reasons the United States actually surpassed Britain in the Industrial Revolution was because of crony legislation. When they first came out with cars in England, which was ahead of us, the lobbyists basically said, gee, this is going to hurt our buggy business. So you had to have somebody walk in front of your car with a flag and a horn to warn everybody the car was coming down the road.
That's like having to call somebody up on the phone to let them know that you're sending an email, right? Yeah,
I mean, it's just it killed the auto industry in Britain, and it moved basically to the United States. In Britain, finally, they kept that law for as long as they could, and then they finally, had to let it go. Cars were everywhere except for Britain. So,
yep, that's true.
It's just the way things are, and the economy is like a child. It's always growing and changing. So your theories have to understand that, and they can't be stagnant. And that's a lot of the problem with forecasting is not only are they static in their ideas, but they're focused purely domestically. And you have to understand things are really very, very dynamic, and capital rushes around the whole world very rapidly. So, it always has moved. I mean, some of your first bubbles, South Sea bubble, emerging market investment, Mississippi bubble in France, people have always been investing elsewhere. It's just that you have to understand that that's the way capital is. It's always looking for grass is greener someplace else.
Mm-hmm. Yep.
So it's an interesting phenomenon, but we have to respect the fact that contagions exist just like the flu, and you start seeing municipal failures in Europe, etc. Then people are going to go, oh my God, that easily happen over here. And so we're looking at probably the markets. I don't see the stock market, really crashing or something. We may get a bit of a dip, but the interesting thing about this bull market is it's substantially different than the one going into 07. Most of the brokers that I talk to, the retail public's not involved.
So is that good?
Well, it shows that we're not anywhere close to a bubble yet. Mm-hmm. And you look at the talking heads on TV; most of them are bearish. They keep saying, "Oh, the earnings aren't there," or the economy, one thing or another, to question the rally all the time. And effectively, you have capital fleeing Europe because of the potential confiscation of assets over there, and you have China shifting from public to private. You have domestically, the pension funds. I have a number of states that actually show me we discuss, and they have no choice but to shift to equities. I mean, they're financially bankrupt, collecting the interest rate at this level. Most of the pension funds were predicated upon an expected 8% return.
Yeah, that's written into their assumptions. And if they change it, then if they change it to more reasonable 5% or 6% return, they all look insolvent, right?
Oh yeah, I mean, if not, far worse. If they just bought bonds, they're dead. And bonds have traditionally, on the asset allocation models they've been using, have been at least 40%.
Yeah. And hey, so what about that that concept there that that basically insurance companies as well have to get these large rates of return, or they aren't going to be able to pay off all these people who bought annuities and life insurance contracts with guaranteed rates of return. What do insurance companies do, Martin?
It's the same problem. The reason rates are down so low, we're going to put out a special report on this whole pension crisis. But there's an aspect to this that people don't realize. And when you look at the demand side, long-term rates have come down, not necessarily for manipulation or the Fed or et cetera. The Fed really cannot control long-term. It can it posts the short-term rates, but doesn't lend long-term. So that's why quantitative easing was trying to buy in the long-term bond to effectively lower the long-term rates in the market, but it has no direct control over it. And what's happened is we've gone into inverted yield curves, et cetera, because as the pensioners have been getting grayer and grayer and grayer, the demand for long-term bonds for these 8% yields was rising dramatically. So as a result, you see the demand rising for long-term, and that drove the rates down dramatically. And so you have all these pension funds that have been chasing yield and have kept constantly bidding it and bidding it and bidding it, and long-term rates have gone down. And so now they have no choice but to even move out of the bond market because they've effectively made it worthless. And they have to go back to the stock market. The ramification of this has been politicians do not understand the dynamics of capital flows and the difference between sectors and internationally. So they have thought, well, gee, we can just always constantly borrow because, we can always sell whatever we need. That only works up to a certain point. And I think what we're facing after 2015 is the shock and realization that people are not going to be there bidding for bonds because the demand curve is shifting. And so the flight to quality for the next major decline is going to be more towards the private sector than to the public sector.
Interesting. So really it's what us free market economist people say, that really the government can't create wealth. Wealth can only be created by private individuals, private companies pursuing their own self-interest, pursuing profit, and taking risk. Because the government produces nothing, right?
Well, this is why we call them public servants. This is effectively, it's like hiring a maid.
In quotes.
Yeah. I mean, you hire a maid. She doesn't bring any income into the household. She costs you money to make your life better. So you don't have to do certain things.
Yeah.
Okay? But she doesn't increase your wealth.
She cleans up your messes, basically.
Exactly. That's it. And that's what we have public servants. They add nothing to the economy.
I'm gonna use that quote. Public servants clean up your messes when they're doing their job properly, and when they're not, they just sit around and wait and make their own messes and then clean them up and blame it on you.
Well, it gets worse because I mean, as you know, we turn everything upside down, and we review every statistics, how it's done, et cetera. And I can tell you that they count all government employees in the GDP numbers twice. Because what they do is they
deducted. Count. Let's face it, they should be deducted.
Well, what happens is they count total government spending. Mm-hmm. Then on the private side, they count total personal income. Mm-hmm. Well, they don't subtract the government employees from that. So consequently, if the government hires somebody, their GDP numbers go up twice as fast than if the private sector does.
Yeah.
Because they count them twice.
And really, they should be deducted twice, for every dollar
pretty much,
you spend.
Yeah.
Right?
It's just an absolute joke, the whole thing.
Yeah.
So
Terrible thing. But, yeah.
But you have to understand what we're facing at this point is a shift in the psychological makeup of capital and the free markets, and that normally you have the flight to quality and they run to the government bonds. Are you going to do that when government's the one in trouble?
Yeah, you want to stay away.
So capital will then move in the opposite direction. So what we have at this stage in the game is largely we have we have at this stage in the game we have the effect of largely the whole aspect of the entire economy is changing. If you're going to have this flight to private sector, it's going to be real estate, it's going to be equities, it's going to be, precious metals, commodities will finally start, going up again. And the gold, the first run into 2011, that was more or less a catch-up move. Gold really, in real terms, did not make new highs. To do so, it has to get to about $2,300.
Right.
That's the adjusted for inflation 1980 high today. So we've effectively in real terms retested the 1980 high, and now we begin to back off, retesting support, and you're going to get everybody, terribly bearish and gold and et cetera, and say, oh, it's a dead thing. And then eventually you'll take up again. It rallied sharply when our economic confidence model turned down from 07. So the big rally in gold was 07 into 11. And we expect to see the same thing again after 15.
Yeah, that's pretty much what you said all along, and it looks like it's holding kind of steady in that 1,200 plus range now, and we'll make new lows this year. Again, now I see now you start having some people turning really, really bearish, going for like 600 or something like that. I don't see that. I think that normally you would retest the old nominal high, which was 875. So anywhere between, effectively, I would say 900 to about 1050 area is where you should see a new low form. And that would be kind of good, because if you got below $1,000, that would be, you'd have everybody preaching, this is it, that's it, we'll never rise again, etc. And that's largely when you have to start looking to buy. But until we get to that point, there's nothing really to do on a investment structured level. Those that are, bought gold coins and just, holding them. Physical, that's a different thing than trading. But this is more or less what we're looking at as we look into the years ahead here. We have to get to this point where we're going to get a shift, and that shift is going to be in the thinking process, and that's largely what we're looking for. And at that point, then you'll get that final big boom where people just look at government as the culprit. And I say Detroit, basically giving a green light, you're going to see more and more municipal failures, and you're going to start seeing a lot of municipal failures in Germany and Europe in general. So, that will take a lot of people by surprise. They have no idea that that's even a problem over there, but
it is. It's a huge problem.
Wow, that's totally in the background. Nobody is ready for it. And when the first domino falls, boy, everyone thinks Germany's so fiscally disciplined, and the Germans, man, they have their act together, and nobody's ready for this, Martin.
Our Germany's in one of the worst economic conditions, actually, but
Yeah.
Lowest, income levels, taxes are too high, and it's just been austerity all the way. So,
Yep.
it's not looking good longer term.
Okay, and that is something that you definitely need to be prepared for. So, ArmstrongEconomics.com. Go there. We're doing another Liberty Mastermind Symposium, by the way, Martin, in Vegas this time. I know you're busy, but libertymastermind.us, the last one, which you so generously participated in, was a smash hit. And we got Wayne Allen Root, who is headlining our dinner on Friday night, February 21st. He's a former Libertarian candidate for vice president. I know that's a kind of fool's errand, but somebody's got to tell the truth out there, just like you're doing. And we got 15 unbelievable speakers. Hey, I meant to ask you, Bitcoin. What's your take on the whole Bitcoin thing, Martin?
Oh, I think, you have people talking it up the same kind of way they were talking up gold. It's all going to replace the dollar. There'll be ATMs, etc. Government can invade any country at once. You really think they're going to allow Bitcoin to effectively compete and people not have to pay taxes? They're allowing it to develop to get people acclimated to electronic currency, because that's where they're going. Larry Summers, what he said, that is the agenda. They want to eliminate all physical currency, period, and then that way everybody has to pay taxes.
So Bitcoin is a head fake, basically, just to con you into electronic currency, because they don't want paper stuff anymore, because there's too much freedom involved, basically, right?
If you look, 1934, they printed $10,000 bills. In 1934. The biggest bill they have now is $100. And so they've been, for a long time, trying to squeeze cash out of the system. Mm-hmm. And Americans don't realize that one of the reasons also the dollar has been a major reserve currency is because it's also the only currency effectively in the world that is still legal tender from when it was first issued.
Yeah.
So an 1861 bill you can actually still spend. It's legal tender.
Yep.
You cannot do that in Europe.
That is true.
European currency routinely always canceled. Mm-hmm. And they cancel it to force people to come out. And so you can't stockpile cash in the safety deposit box. You have to come out with it. And that then makes it taxable. I mean, that's even Britain. Old, British pound notes from the 50s are not legal tender.
That's right. That's very true.
The United States is the only one whose money doesn't expire. And that is one of the reasons it's on a cash basis around the globe, everybody wants dollars.
You're totally right about that. I have from right after the founding of the country, every dollar issued can be used, and yeah,
still legal tender.
Yeah.
And so it's interesting, but people have to understand that the United States is substantially different.
Yeah, no, that is a great point, and
it's not to say the dollar. Eventually, I think when the economy turns down, then we're going to have to create some new sort of reserve currency. But and that's more for political reasons. Mm-hmm. China and Russia are both complaining that whatever the U.S. does, it infects the rest of the world. And that's true because it is the reserve currency.
Yeah, and that's...
they don't like the power.
Right. And there's an inevitability towards, at some point, there's going to... that that is going to occur, right? The new reserve currency.
Yeah, I mean, I think it's going to be at the very latest by 2032. But I would say there's more. We definitely have risks of that starting to emerge after probably 2024.
Mm-hmm. So that far out, huh?
Yeah, it's we're not quite there yet.
What about
we have to get through the 2016 presidential elections, where the first time we may start seeing a rise in third-party activity.
Yeah.
So your libertarian guys might, put in a better show this time.
Yeah, well, the parties seem to be imploding before our very eyes, right?
Yeah, I mean, it's the Democratic Party is a coalition of all the various different interest groups, women, black, Spanish, etc.
As well as organized crime.
Yes.
You can't leave them out. They could be the most important one.
Where the Republicans were never a coalition.
Yeah.
And so they don't really know how to deal with the Tea Party people. And that's the whole problem. So I think there's more of a likelihood the Republican Party will split than, per se, the Democratic Party.
Mm-hmm. Yeah, well, yeah, it's a bit disheartening to look at the political scene and all the damage that it's inflicted upon the country, because it's like two rival New York City crime families having a turf battle. Who's going to get what? And
I mean, I've testified before Congress on taxes, and they do not get it. And of course, a lot of the socialists, they try to paint corporations as greedy and oh, gee, if they'll offer, if they can get somebody to work in Asia for $2 cheaper than an American, they'll move there. And that's not the case. The biggest problem, and that I have found with strategically advising major multinational corporates, is not per se the rate so much as stability. And the biggest problem that they have over here is that whoever gets in, the taxes then go up, then they come down, then they go back. And there's no way to do a business plan. Mm-hmm. And just look at it this way. Would you sign a lease to rent an apartment where the lease said, if the landlord needs money because he lost something, he can raise it anytime he wants?
Yeah, right.
I mean, would you sign a lease like that?
No, of course not.
These people, they have to build plants, etc. They have to come up with a business plan. They need some sort of stability for 20 years.
Yeah.
And the biggest question I get, well, what do you think of the politics? It's a political risk. But the politicians want to paint it as, oh, they're just greedy. No, it's not. It's basically offer a strategic, package. And you might find that people will stay. You have a lot of foreign countries are saying, okay, fine, come build your plant here. We guarantee you this will be the tax for 20 years.
Yeah. And it's a great thing when it happens. And, hey, we talked a little bit pre-call about this, but people fleeing these high-tax states for places like Florida, for places like New Hampshire and Washington State, Texas, and South Dakota, where they have no income tax and they have no plans to implement one. And I think one of the trends you'll see in the coming years is states eliminating their income taxes. However, they have to do it because they know it's such a magnet to bring in population and companies and get companies to start because, hey, the power to tax is the power to destroy, as it was said by Judge Learned Hand many years ago. Well,
people watch the New Year's various different parades. I can tell you the Mummers Parade in Philadelphia was no longer funded by the city because the city didn't have its money.
Really?
It was all the private sector that came in and picked up the bills for cleaning up the street, etc., not the city.
Mm-hmm. Yeah, that's rather shocking.
This is what's going on.
Yeah, and more of this, but traditional functions of the private sector, the voluntary private sector, charitable private sector, now been picked up by the government, And, of course, the government can't do anything as well as the private sector when the private sector really is dedicated to doing it properly. But that's for another day. Anyway, Martin, always a pleasure. Good luck for the coming year. And I think you shed a lot of light on what's going to happen, because diminished faith in the public sector, in the government, and just that book that came out, just as an aside, by Gates, former Secretary of Defense, further undermines confidence in the administration, as if it needed anything else to do that. Just a perfect example that the guy really couldn't care less about what it is the Army's doing. He just wants it done with, and cares more about the political considerations than the mission, right?
That's all it is anymore. It's, honestly, 20 years ago, I would sit down and talk to the major politicians, Margaret Thatcher, et cetera, and I could have an intelligent conversation. I can no longer do that today.
Sad commentary. Well, thanks so much, Martin. Talk to you soon.
All right. Thanks a lot.
Hi, it's Kerry Lutz. I recently decided to move my retirement account into physical precious metals to hedge against the coming times. If you want to move an existing retirement account into physical precious metals that you can hold in your hand, tax-free, there's no company that can do it more quickly and efficiently than Regal Assets. It took them just 24 hours to open my new IRA account, and all I had to do was fill out one simple form. The best part is that Regal Assets does all the work for you. They cover the setup and administrative costs for 2013. If you're interested in making the same move I did, call 855-678-6620, 855-678-6620. That's 855-678-6620, or visit them at regalassets.com. You'll be glad you did, and tell them Kerry sent you. What happens if the collapse never really comes? You need income, and Jason Hartman can help you get it. He's helped thousands of people realize their dreams of financial independence through real estate investing, and now he's got an unbeatable offer for you. He's offering my ebook, Forget Wall Street, Go for the Gold and Silver Too, for free. Just visit jasonhartman.com/Lutz. The first 100 Financial Survival Network listeners will get the book free. Remember, you can't afford to put all your eggs in one basket. Real estate should be part of a balanced investment portfolio along with gold and silver. Just go to jasonhartman.com/Lutz and sign up today. When it comes to real estate investing, Jason Hartman is the only person we trust on the Financial Survival Network. So make your money work as hard as you do by building an income property empire. Real estate is America's proven investment. Go to www.jasonhartman.com/Lutz and get your free ebook today. That's Jason, HARTMAN.com/Lutz. That's Jason, HARTMAN.com/Lutz. Jason knows how to help you retire with a portfolio of income-producing property. Go to jasonhartman.com/Lutz.
The Financial Survival Network, helping you to survive and thrive in the new economy. Get our complimentary newsletter at financialsurvivalnetwork.com. This is the Financial Survival Network.